Hello everybody and welcome to the midweek market update from Smack the Markets for the 8th of January. So I'm sure you're all aware of the main drivers behind market sentiment at the moment being the rising tensions between the US and Iran. Those have escalated over the past sort of week and even more so overnight as well. So let's take a look at a few markets here that we've been keeping a close eye on and discussed on Monday, and some of the opportunities that we're keeping an eye on going into the second half of the week. So if we take a look at the Dow Futures Contract, first of all, on Monday, we were highlighting this level here around the 340 area as a sort of key structure level. And we said if the market finds support here, we could be looking for intraday long opportunities. If the market breaks underneath this level, we could see a sharp move down to close the next sort of trading window, which is down here at 28 sort of 160. Now, we can see what's happened. The markets so far this week, it managed to sort of pick up, establish quite another sort of key level above price now, where we've had quite a few tests there at 28 sort of 700 or just above that price point, and then we've had the resumption to the short side here. Now, interestingly, the volatility overnight has sort of pushed the market down to break the level, but promptly sort of retraced back above it. So just reinforcing this sort of price point. Now, what it means for us as traders here is that we've got some very well-defined structure here in the market for opportunities going forward. If the market finds support here, we've got that potential window up to 28,700, underneath 28 sort of 340, where we got at 28 sort of 160, and then down to sort of 28,000 as sort of target areas for sort of trading windows. Now, also on Monday, we discussed gold. We're looking for opportunities to sort of get positioned in gold to take advantage of their continued strength. That actually did happen. The market retraced a bit further than initially expected, but it did come back in, and as a lot of these precious metals actually sort of closed this sort of gap. Gold didn't quite close the gap, but not far off it. Eventually started to turn around, and of course the volatility that we've seen here has been as a result of the Iranian sort of attacks overnight. So again, what we're looking for here in gold is our preference is still looking at long opportunities on gold. If we just take a quick look at this on the high time frames, we can see that there's a bit of a level through here where the market sort of found resistance before. Just sort of zoom out of this, and you can see that where the market sort of rallied to or overnight was around this sort of 160 sort of 17, just above this sort of 1.6 level, where there's also been some key sort of reaction right back several years ago now, but there has been some key support and resistance around that sort of price point too. So where it's at the moment is, again, retracing back into sort of some value zones. Again, we're looking for opportunities when the market comes back into these value zones for sort of positioning. As long as the sort of risk off approach sort of continues and the sort of focus on safe havens, again, gold is one of the better markets for sort of safe haven places. So coming back to currency markets now, on Monday we were looking at Aussie Dollar and Kiwi Dollar, particularly these sort of key levels here and the key structure on the daily charts. Said on the Aussie Dollar here, if the market broke underneath this level, then we were looking for short opportunities. Again, come down to the 4-hour time frame, you can see the level that we were discussing. The market did break that price point, and it sort of promptly closed to trading windows here. Again, the strength of the trend here seems to be sort of well intact at the moment, and again, with the markets just sort of sitting above another decision point area. So again, below the sort of 68 640 level, we've got another trading window down towards the sort of 68 sort of 200 price point. So again, our sort of focus is taking advantage of the trend, but we'd rather wait for that confirmation of that trading window or trading level to be broken, structure level, I should say, to be broken before looking at sort of positioning. Now, similarly with Kiwi Dollar, again, Kiwi Dollar's not been quite so weak, and this one not quite so sort of decisive at the moment. Still sort of trading sideways here on the 4-hour time frame. So we're not seeing any sort of opportunities on this just yet, not at least until this market sort of weakens off, or indeed it sort of breaks out of this sideways range. Now, another one that we're starting to keep an eye on here is Great British Pound against the Aussie. Now, sterling has been sort of quite strong lately. The Aussie obviously been sort of very weak. And what we're seeing at the moment here is, if we take a look at this on the higher time frames, you can see on the weekly chart that this market has now sort of broken out sort of quite decisively of a long-term level. So in the structure of this trend that we've got here on the weekly, we've still got plenty of distance to go. If this trend is going to continue, we need to see moves above the sort of 1.9500 area and even beyond. And at the moment, the market's looking sort of quite strong. So again, come down to the lower time frames, you can see on the weekly that the market sort of recently broken out through a sort of structure level. The trend's not wonderful on the daily time frame, but we are seeing strength as the market sort of breaking through key structure. So again, if we come down to the 4-hour time frame, we can see at the moment that the market's sort of consolidating underneath another key decision point level. So above that level, we've got a trading window up towards that sort of 193 area. And again, if the market sort of gets up here above this level, we'll be looking at positioning for opportunities within this sort of trading window to the long side. So if we just take a quick look here at Blackwell Global's trading bootcamp, we're running a trading bootcamp through the course of January and into February. If you like the sort of methodology that we use for trading the markets, then you're welcome to come along and join this trading program free of charge to find out more about it. Now, if you come along to Blackwell Global's website, come along to the education tab, then click on learn, you can get to the trading bootcamp page, which brings you to this sort of page here. Now, through here, you'll find out more details about the program. It's a 4-part program run over 4 weeks, and it starts on the 13th of January. So next Monday in the evening at sort of 7 o'clock UK time. So if you'd like to come along and join, all you need to do is come up to this page, click sign up, and you'll be able to register for free. So I hope to see you on the webinar, and I certainly hope you find this useful and look forward to speaking to you next time. Bye for now.